Good morning, new 1%. It's your boy Boomin coming at you with yet another Cardano video, guys. We got these Cardano videos every single day. Gently tap the like button, gently smack the subscribe button for me, guys. Actually, don't gently slap it. Go ahead and slap it hard. Slap that subscribe button super hard for me, guys. We got another video today. We are going to be talking about Charles Hoskinson and his plan for regulation for crypto. Now, there's some buzz going on that Charles is going to be working with the Trump administration. Those are rumors right now, unconfirmed rumors. So, but as of right now, Charles does have a plan on how he would like to see crypto regulated. I think this is a very important video. If you guys have not seen it, we're showing it now. So let's get right into it, guys. Leave a comment down below. Tell me what you think. Let's get right into the video.
Chairman Maloney, Ranking Member Fishbach, members of the subcommittee, and congressional staffers who work so hard. Thank you for inviting me to testify at this hearing. I applaud the work of this subcommittee, and I appreciate you all taking the time to provide a forum for the blockchain industry. The blockchain industry has grown over the past decade from a small group of uncommercialized volunteer developers, and it was very small, believe me, to a trillion-dollar global economy encapsulating sophisticated engineering, scientific research, publicly traded companies, and millions of users. While our remarkable growth yields significant opportunities ranging from infrastructure security to entirely new economies like metaverses and NFTs, it also has presented new challenges and amplified the existing problems. Our legacy systems cannot handle the rapid movement of value without counterparty risk and require centralized middlemen. Our regulatory tools, risk management systems, and oversight processes were never designed for such speed, scale, and rapid evolution. For example, in just 4 years, our industry has touched concepts ranging from IPOs to intellectual property to completely new business structures called DAOs that are effectively leaderless and jurisdiction-free. Reflecting upon the 20th century, the dominance of the United States has rested upon 3 pillars: our financial services, our technology companies, and our manufacturing capabilities. These industries are rapidly transforming under the demands of globalization, increased competition, new technologies, and our desire to define ESG rules to ensure a sustainable, values-driven global economy. At our core, our industry's technology is about creating distributed ledgers to store information that needs to be transparent, auditable, time-stamped, and immutable. This process enables records of social and economic concerns to be reliable and programmable. For example, as a rancher, I have to deal with water rights, grazing leases, BLM land, and numerous other agreements, contracts, and economic events. Many of these are not digitized, nor are they shared in ways to provide emergent value to policymakers, regulators, and researchers. The consequences of this fragmentation and lack of digitization are a large amount of inefficiency, replication of work, and a lack of access for entrepreneurs and innovators who could build new products and services that would dramatically reduce costs and improve efficiency for all stakeholders. The power of blockchain technology is its universality and permissionless model for innovation. Our company, Input-Output, has never had to pay a royalty, file a patent application, or acquire a license to pursue business in countries as diverse as Ethiopia to Mongolia. Thus, we have to understand that categories-based regulation that is segregated to the borders of a particular jurisdiction and relies upon centralized actors for reporting and disclosure is unlikely to be effective and, frankly, will inhibit regulation. Furthermore, the Internet's governance, evolution, and innovation aren't controlled by the ITU or some other transnational body, but rather by thousands of interconnected and interdependent agencies and private companies working towards the self-emerging common goals of increased connectivity, capacity, and utility. If we are to discuss how to regulate our industry, protect consumers, and align growth with the realities of modern society, then we ought to have the humility to admit innovation makes specifics difficult. We should focus on principles instead. Blockchains enable the liquidity of value, thought, and commerce at a scale and speed society has never enjoyed before. Instead of predicting the outcome of these new capabilities, we ought to decide on what risks we must guard against, what fundamental rights consumers should have, and how to use new tools for the greatest possible good. It seems prudent to focus on concepts like measuring decentralization, information asymmetries, accessibility of data, and access rather than arguing about jurisdictional bodies or asset categorization. Cryptocurrencies are financial stem cells at their core. They can be nearly any asset and can change over time. Principles don't change. For example, the notion of measuring consolidation and its risks has been an endeavor the United States has pursued and is frankly good at since the Sherman Antitrust Act of 1890. While none of us are personally familiar with life in the 1890s, we'd certainly be comfortable with the intent and concepts behind the Sherman Antitrust Act. Centralization of markets and power seldom leads to good outcomes. I hope we can engage in a fruitful and ongoing dialogue throughout the coming months as the United States debates the regulatory future of the American blockchain and cryptocurrency industry. Like the prior Congresses in the 1990s discussing the regulatory framework for the Internet that led to the rise of trillion-dollar companies, I believe this Congress can achieve great results by working with our industry in a principles-based legislative approach and leveraging...
I just gotta say, look at the baddie right back here. Tamara Hassan, straight baddie. I see you, Charles.
...our capabilities to innovate and adapt. Thank you all for your time, and I look forward to your questions.
So there you go, a short glimpse into what Charles has to say here. You know, I'm actually thinking about playing the whole clip here. It's about 21 minutes. You know what? Yeah, let's do that. I think this is very important. And so, yeah.
Thank you, Mr. Hoskinson.
Mr. Hoskinson, did I say that? I'm trying.
Yes.
Thank you very much. And I know we just have a few seconds left, but there's a lot of discussion about whether we should regulate certain cryptocurrency as commodities or securities. You know, what do you think might the benefits? And maybe you could talk just a little bit about that. You know, what are the drawbacks, things like that?
Well, with 37 seconds.
No, I'm sorry, yeah.
No, the gentleman can take as much time as he requires.
Oh, thank you, Mr.
Well,
Chair.
I appreciate that. Thank you.
I mean, don't push it, but...
It's a fine line here.
You got to be careful. I'm Italian. So, you know, when you look at cryptocurrencies in general, I've always viewed them like financial stem cells. They're kind of more fundamental than a particular category, like a currency or a commodity. And really, it depends on the markets they're traded on and the use and utility that they have. But at the end of the day, you have to ask yourself, what public policy considerations are you attempting to satisfy? Is it sanctions compliance? Is it consumer protection? Is it market stability? What we do as an industry is we're all about transparency. So it's kind of funny we're talking and debating about disclosure regimes. There's no other financial asset in the world that really is as transparent as a cryptocurrency. Every transaction from the very beginning for Bitcoin, for example, from January 3rd, 2009 is known. Every single one. The holdings of the founder are known because all of these things are publicly available to everybody. So it's more about, in my view, understandability and the tooling required to make this work on a global basis. So I don't think it would be wise to say, well, is it a security or a commodity, or fall into this temptation of who's the more permissive regulator or what is the regulatory arbitrage, but rather just take a step back and say, what things do we want to guard against? And we now have 13 years of history as an industry of, I think, 6 or 7 collapses, a whole bunch of interesting new things like NFTs that have always pushed the limit, and a global marketplace with more than 100 million people floating around that we can draw from, and we can look on a case-by-case basis and build a framework that makes sense. What's encouraging to me as an entrepreneur, briefly, is that there's a lot of great legislation that's been proposed recently, like the DCA, the FIA. There's executive orders that have come through that are trying to force clarity amongst the executive branch. So these things together create a global dialogue, and if we're clever about it, I think we can converge to a reasonable compromise that we as an industry can live with and continue to be competitive with.
Thank you very much. I appreciate that. And thank you, Mr. Chair, for your indulgence.
Thank you.
The timing of today's hearing is very apt. Cryptocurrency markets have been on a roller coaster in
I don't think it's a question of, as I mentioned before, who is more permissive or who's less restrictive. It's more of a question of efficacy. And when you look at commodities, commodities are intrinsically decentralized. So I grow hay on one of my farms, and I didn't have to ask permission. There's no central hay agency. We're not the Soviet Union. We don't regulate things that way. And then suddenly when I cut it and I sell it, it enters into a global marketplace. Now, that marketplace has rules and principles and protections, and there's a retail component. People feed horses, and then there's certainly an industrial component. So if cryptocurrencies are truly decentralized and that actually is a real thing, then it does make sense to embed that into a framework that's designed for things that are intrinsically this way. And you have to look out for cartels, market manipulation. You have to look out for where global actors try to come in, like China or others, and take over a market like they're trying to do the lithium markets. But that's a very different type of notion than a security in that respect. So my view, the most effective thing that can be done over the next 12, 24 months is to have a really good notion of what is decentralization and what are the factors that produce that. And if it gets past a certain threshold, it makes a lot of natural sense to regulate things like a commodity as opposed to a security. And if they don't, well, then it's very obvious who has the disclosure requirement.
Well done. So thank you for your answer. Mr. Chairman, with the lack of remaining time.
Look at that boy Charles right there making us proud. Oh, man. I don't know why Charles gets so much hate, bro. People just be hating on this man because he's a genius. Look at that. He just over there shining. I love it.
I'll yield back. Thank you.
As I had to step out, I had a meeting in my office with constituents, but I'm going to start with you, Mr. McGonigal. This isn't, it's not corn, it's not gold, it's certainly not dollars, and there are a lot of questions here. One is if the U.S. is going to regulate, then it's CFTC versus SEC. Some have suggested even a new agency. Then there's the how, if you do that, and then there's the who do you regulate. So my understanding is there are 20,000 approximately cryptocurrencies in the world worth about $3 trillion. Is that close? Give or take $1 trillion on a day on the values, but somewhere around 20,000 currencies. I mean, the question I have, 20,000 currencies, CFTC, how many people work at the CFTC today?
Yeah, thank you, Congressman. Of several hundred.
Several hundred. So you would be talking about, if they gave up everything that they're currently doing, you're talking about, 100 cryptocurrencies a person. My point is, it's not possible to regulate all of these currencies. It's just not. And so then the question becomes who. And I mean, is it that we're going to have a value if the currency reaches a certain dollar figure that all of a sudden we're going to regulate it? I'm interested in any comments that any of you may have on, of the 20,000 cryptos, how you determine who should be regulated.
Well, one of the powers of our industry is the fact that regulation can become algorithmic. So you don't have to think, well, which person's going to sit down and look at this big pile? Think of the IRS and tax returns. We could quadruple the size of the IRS, we still couldn't audit every single American. It's just not possible. And so what you have to do is say, what tools do we have at our capability? And what's magical about cryptocurrencies is that in the transactions themselves, they can carry metadata, they can carry identity. Rule makers and policy makers can take a step back and say, well, these are the things that we care about, and we can make sure inside the systems that those things don't settle and clear until those things are present. So it's really more of a conversation of what do you care about, and then what we can do as technologists is create a self-certification system, and then what can happen is when there are anomalies or special cases, which often would be rare, then the CFTC or another regulatory body could look through and say, well, let's investigate that. That's generally how we do law enforcement in the nation. We don't break into everybody's house. We wait until we get a warrant, and you have to have some cause for it. So there needs to be some social infrastructure for that.
So self-certification is different than an agency regulating.
Well, they're interconnected. So you have SROs, you have market standards, you have principles, and in many cases, financial regulation is mostly done by SROs or private organizations. If you look at, for example, compliance, it's not the SEC or the CFTC going out there doing KYC and AML. It's banks that are doing these types of things. So it's a public-private partnership, and what needs to be done is to establish those boundaries, and then what we can do as innovators is write software to help make that happen. And literally, that's what Chainalysis is doing right now and their competitors.
I think, I mean, I don't see a way for us to regulate them all. I do think if it's going to happen, there has to be some type of self-certification of it. What I do fear, because I don't think that crypto should be a significant portion of the average investor's portfolio. I don't. I mean, I do fear that if we all of a sudden are regulating it, then the average investor feels like there's more security and stability in the value of it. And I think that's a dangerous thing for the investors. And I would tell you, I'll be very...
This is just another victim here of ignorance of the crypto ecosystem. I mean, my man's literally just said we have the tools to regulate every single crypto based upon the SEC and the FCTC's regulations and guidelines, and he's sitting there saying, I don't believe you. Like, dude, he's a technologist. He understands this stuff. I just think Mr. Scott here is very, very biased, and that's clouding his judgment.
Very concerned about the average American citizen having more than 5% of their investments in the crypto markets. I'm not talking about guys like you who know it inside and out, but
and then you have to really think about why we're pushed towards crypto. If the current financial ecosystem was so great and opportunities were so great, like Mr. Scott here, I don't even know if Mr. Scott has ever had a real job a day in his life. He's so worried about regular Americans. Why is it that people are flocking towards crypto and not staying in the dollar if the dollar is so great? It's because of inflation. It's because regular Americans can't get by. It's because standards of living keep going down, so the only way people can think about escaping is via alternative cryptos and alternative methods like cryptocurrency. Mr. Scott here fails to link those two things.
I've expressed my concerns. I appreciate your comments on the self-certification. I do think that's a path that we need to be considering. And with that, Mr. Chairman, I'll yield the remainder of my time.
And Mr. Cloud.
Thank you, Chairman. And thank you all for being here, and thank you, Ranking Member, for hosting this. I carry some of the concerns, I guess, about regulation that some of the former members have carried, just because a lot of times the government will see mission creep. And so one of the great appeals of cryptocurrencies when I talk to people who kind of dabble in it is the fact that there's not an intermediary at this point. And so I also had the question about who and how and those sorts of things. How do we keep this limited? What is the current market failure we're trying to fix, basically, and how do we keep it, any sort of regulation, narrowed to that, and in such a way that over time it doesn't become very much invasive? And if you can answer that, but I'll point out Mr. Hoskinson mentioned the banks as an example of how this is done well. If you talk to the bankers, a lot of them will talk about how this is not done very well, in the fact that they have to be the authoritarian arm of the federal government in a lot of different ways. So anyway, your thoughts on that, and feel free to chime in.
Yeah. Thank you, Congressman, for the opportunity to address that particular issue around a certification of products currently at CFTC. It isn't a situation where an exchange can willy-nilly certify a product and allow that for trading. There are all core principles apply, but in particular, not readily susceptible to manipulation. And so what we're getting at is, who's interested in trading this product and why? And is there sufficient liquidity, for example, or sufficient interest by market participants that there actually is a market value to exchange or trade risk? Certainly in our markets, we think of why individuals would want to hedge their producers, farmers, end users, and they have an interest in the actual underlying commodity. But we also see interest in cash-settled contracts, these financially settled obligations. And I think that under our current system of regulation, we have an ability to winnow out activity or contracts that don't provide a market value.
Any of you want to speak to that, or have another question to move on to?
Sure. Can I comment on the KYC AML side?
Sure.
I don't think anybody's doing KYC AML well, and nobody wants to be a data broker. It's pretty crazy what's going on right now. I'm a big believer that you have to understand what private industry has been doing over the last century or so. If you look at Google, you look at Facebook, you look at these companies, they're more than companies. They don't just go and make sprockets and cars or something and they compete in a fair market. They're ending up getting a lot of control and power over foundational resources. So if we look at the prior centuries, like Standard Oil, it got control over the energy industry. And then we said, boy, that's probably not a good idea. We should do something about it. Now when we look at Google, Facebook, these other companies, they've gained so much control over information, thought, speech, and other foundational resources, hosting. They actually can define an entire marketplace and decide who gets to compete and who doesn't. It's relevant to cryptocurrencies in the blockchain industry because at the end of the day, it's the liberation of those resources. That's what we're really doing here. To separate the wheat from the chaff, we're talking about a resource-based economy. And the point of decentralization is saying that maybe nobody should be in control of our freedom of expression or commerce or association. So that requires a fundamentally different way of interfacing with those marketplaces, different way of handling identity and compliance.
I only have a minute, so if I can jump in here. The fact that you're talking about big tech, I think, is very interesting in this, because you also mentioned that one of the features of regulation is that we can use algorithms now.
That's
Yet
right.
we've seen them use algorithms to limit people's freedom of speech and to do all these other nefarious things. So if we give the government that power, especially, you know, as the Federal Reserve is looking toward creating a digital currency potentially, and we already have banks being thrust upon them to enforce ESG scores. And in China, we see where those ESG scores suddenly become personal scores on individuals. It's not a far step technologically, and in the way we see some of the agencies working right now to begin to target those algorithms toward people and their personal habits and their spending. So how do we compete economically on the world stage without threatening the privacy rights of Americans going forward? Because this is a very dangerous slope if not handled correctly.
Yeah, I couldn't agree more. I'm deeply concerned by social credit, deeply concerned by some of the proposals for CBDCs, because you can have transactional discrimination against any ethnic group you want or any political philosophy you want. So the point is the algorithms ought to be built out in an open source process, transparent and available to all, and people have to have the ability to opt in instead of opt out. So the power of our industry is we didn't have a government agency or some central actor say, oh, here's cryptocurrencies. It was the tireless work of millions of people, many of which never met each other, around the world, coming together voluntarily and building a new economy worth trillions of dollars. That's the way we ought to think about it, not how do we create some government agency or how do we create some central bank or central algorithm that'll control everything. And then you ask yourself about the outcomes you desire. So it's clear that there's been some problems over the last 13 years, and we're working our way through that. But at the same time, we have created value for millions of people, and we shouldn't lose that sight.